Florida homeowners are seeing their housing dreams unravel in real time. It's not being driven by a stock market collapse or failing banks, but by a more hidden and dangerous force. Monthly housing expenses are surging from multiple unexpected angles. Property insurance premiums have climbed 34% in just 3 years. Property taxes are up 40%. At the same time, home values have declined for the first time in more than a decade. This is not a routine market swing. Several pressures are hitting simultaneously, forming the most severe housing affordability crisis Florida has faced since 2008. Here's what you need to understand right away. First, home prices are genuinely declining across Florida. Over the past year, prices fell 4.3% statewide. The latest data shows the median single-family home price at $415,000 in December 2025, down from $430,000 in April 2024. This is the first sustained drop since the 2008 financial crisis. Some areas are seeing sharper corrections. Certain Tampa Bay neighborhoods are down nearly 10%. Fort Myers has posted similar decreases as listings accumulated faster than buyers could absorb them. Even Miami, usually resilient during downturns, recorded a 0.9% year-over-year median price dip. The issue isn't just that prices are falling, it's that they're falling while nearly every other ownership cost is rising. Lower purchase prices don't improve affordability when insurance and taxes are skyrocketing. Homes now sit on the market about 49 days on average, compared to 30 days at the peak. Sellers are cutting prices and adding incentives to close deals. Others are removing listings entirely rather than accept low offers, hoping for a rebound. But with 110 straight weeks of inventory growth through October 2025, any recovery keeps getting delayed. Second, insurance costs have reached record levels despite claims of stabilization. The average Florida homeowner now pays about $3,048 per year for basic coverage, up from $2,098 3 years ago, a 34% jump. Some areas are far worse. Monroe County homeowners average $9,058 annually. Miami-Dade residents pay around $6,614. Officials say the market has stabilized, but that description is misleading. In 2025, the pace of increases slowed and monthly jumps were nearly flat by September. But stabilizing at extremely high prices is not the same as relief. It simply means rates stopped rising after becoming unaffordable for many families. Multiple forces caused this crisis. Hurricane Ian produced $113 billion in insured losses in 2022. Hurricanes Helen and Milton added roughly another $100 billion in 2024. Reinsurance costs, the coverage insurers buy themselves, rose 50 to 100% for many carriers, and those increases were passed directly to policyholders. Florida generated 76% of all U.S. homeowner insurance litigation. Fraudulent assignment of benefits roof claims also inflated costs. Contractors promised free roofs, padded claims, then sued insurers. Reforms in 2022 and 2023 reduced this behavior, but premiums had already risen to cover years of losses and lawsuits. Even claim-free homeowners saw rate hikes because insurers price risk by region, not individual history. 10 insurers became insolvent and exited Florida between 2020 and 2023, leaving many homeowners scrambling for coverage. Many were forced into the state's insurer of last resort, which usually charges more and covers less than private options. Third, property tax collections surged 40% in 3 years. Florida now collects $59.2 billion annually in property taxes, nearly twice the combined growth rate of population and inflation over that period. Over 10 years, collections doubled. The reason is straightforward. Property values more than doubled from 2015 to 2025. When assessed values rise, tax bills rise even if millage rates stay unchanged. Florida's median effective property tax rate is 1.14% versus 1.02% nationally. A $400,000 home carries roughly a $4,560 annual tax bill before exemptions. The Save Our Homes Amendment limits assessment increases to 3% or CPI for homesteaded primary residences only. Rental, vacation, and commercial properties receive no such protection and can rise up to 10% annually. State leaders are proposing constitutional amendments to eliminate or sharply reduce property taxes. One proposal would remove all non-school property taxes for homesteads. Another would phase them out over 10 years. Another would exempt residents age 65 plus from non-school property taxes. These sound attractive, but removing non-school taxes would create a $43 billion annual revenue gap. Local governments depend on these funds for police, fire, roads, and services. Replacing the money would likely require raising the sales tax from 6% to at least 8.85% or higher, shifting the burden to all consumers, including renters, who wouldn't benefit from property tax cuts. Fourth, mortgage rates remain stuck above 6%. Throughout 2025, they hovered between 6.3% and 7%. Even though the Federal Reserve cut rates 3 times, mortgage rates did not fall in step, frustrating buyers. At 6.5%, a $350,000 loan cost about $2,212 per month, excluding taxes and insurance. At 3% 3 years ago, that same loan would have been $1,275. That's $737 more monthly, or $8,844 more per year in interest alone. Affordability calculations are wrecked by higher rates. Buyers who once qualified for $400,000 at 3% now qualify for roughly $275,000 at 6.5%. With a median price of $415,000, many are priced out. First-time buyers account for just 21% of purchases, far below the historical 40%, and their median age is now 40. Younger households struggle with rent, student loans, childcare, and savings simultaneously. Forecasts suggest rates might ease slightly to about 6.3% by late 2025, but that small drop won't restore affordability. Many buyers are waiting for sub-5% rates, yet experts expect elevated levels to persist. Fifth, construction costs have nearly doubled since 2015. Average costs rose from $103 per square foot in 2015 to a peak of $160 by 2024, a 57% increase. Labor shortages, supply disruptions, and inflation drove the surge. This affects buyers through higher new build prices, higher insurance premiums due to replacement cost calculations, and higher property assessments. Insurers directly tie premiums to rebuild costs. When rebuild costs rise from roughly $103 to $162 per square foot, risk models adjust immediately. Post-Hurricane Andrew building codes require stronger, more expensive construction. Material prices, lumber, steel, concrete, jumped sharply, with lumber at one point rising over 300% in 2021 and still above pre-pandemic levels. Skilled trade labor remains scarce, allowing workers to charge premium wages. Sixth, inventory created a buyer's market and then abruptly tightened. Florida logged 110 straight weeks of inventory growth from early 2023 through October 2025 as affordability crushed demand. Buyers gained leverage and sellers made concessions. Then inventory began shrinking starting October 2025, beyond normal seasonal patterns. New listings fell 2 to 7% year over year from May through September. Delistings, homes pulled without selling, rose 60% year over year. Many motivated sellers already exited. Remaining owners prefer waiting over accepting losses. New construction starts slowed due to financing costs and weak demand. Some counties show about 4.6 months of supply, close to balance, but high delisting rates distort that metric. This has produced a standoff. Buyers reject old prices while sellers reject new ones. Seventh, migration into Florida slowed but still exceeded pre-pandemic levels. Florida ranked the number 2 growth state in 2025 by U-Haul data. Inflows cooled from the 2022 surge but remained strong. The migrant profile changed. Pandemic-era remote workers from high-cost states once drove bidding wars with cash offers. As return-to-office policies expanded, that wave eased. New arrivals are more often retirees using equity from expensive markets, buying with cash or large down payments, and showing less rate sensitivity. Younger workers face stiff competition from cash buyers. International demand rebounded too, with foreign purchases up 51% versus 2024. Canadians account for 18% of that activity, while Latin American and Caribbean buyers make up 45%. Many view Florida property as a stable asset amid currency risk, supporting price floors even as locals struggle. Eighth, the rental market is under pressure from both sides. Rents remain near record highs, blocking tenants from saving for down payments, while landlords face surging costs that force rent hikes just to break even. Two-bedroom averages run about $2,800 in Miami, $2,200 in Tampa Bay, and above $11,800 in Fort Myers, reflecting 30 to 50% increases since 2020. With a median household income near $67,000, many renters spend over 40% of gross income on housing. Meanwhile, landlord insurance, taxes, maintenance, and labor costs jumped sharply. Some insurance premiums tripled or quadrupled. Non-homestead taxes can rise 10% annually. Many small landlords are selling, reducing rental supply and pushing rents higher. Evictions rose in 2025 as tenants fell behind. New affordability laws encourage development, but projects take years, and developers hesitate amid high financing costs and uncertainty. Ninth, coastal areas face fundamental climate and insurance challenges. Coastal owners must carry flood insurance in addition to homeowners coverage. Updated federal flood pricing now reflects individual property risk, causing some premiums to jump from about $800 to $2,000 or $3,000 or more. Combined wind and flood coverage can push annual insurance to $10,000 to $15,000. Only 20% of homeowners carry flood insurance, but it's mandatory in high-risk zones with mortgages. Middle-class coastal ownership is becoming unrealistic, shifting these areas toward wealthy buyers and investors. Storm-damaged communities rebuilt to modern codes become more expensive, displacing longtime residents and accelerating exclusivity across premium coastal markets. Tenth, this is a perfect storm with no clear timeline for resolution. Normally, some factors ease while others tighten. Now, nearly everything is negative at once. Price declines are offset by tax and insurance spikes, rate cuts don't help enough, new construction remains expensive, sales may improve nationally in 2026, but Florida faces unique insurance and climate pressures. Policy proposals create uncertainty. Recent reforms help but cannot reverse accumulated increases. Experts disagree on timing. Some expect improvement in 2026, others predict prolonged stagnation. Construction inflation is permanent. Climate risk is intensifying. Migration likely continues. No one can say exactly when stability returns, only that current conditions are unsustainable and adjustment is inevitable. This situation requires immediate attention. If you own, review and appeal your property assessment if needed, shop insurance annually, and pursue mitigation upgrades for discounts. If you rent, expect landlord cost pressures to flow through at rents. If you're buying, get pre-approved but don't rush on small price dips. Many areas may fall further. Subscribe, enable notifications, share this with anyone considering a move or purchase in Florida, and comment on how these pressures are affecting you. People need the full picture, not just the sunshine and beaches.